Hi, I'm Jasmine, the Creator's Tax Strategist and Coach. If you're new here, I help high-earning creators and entrepreneurs save money on taxes through tax planning and strategizing for now and for the future. I'm well known for using a legacy and wealth trifecta to illustrate my clients' tax and asset protection plans in a single diagram. In today's video, there's a very important note I need to clarify for you regarding LLCs. It's the top two things I would absolutely want you to know if you knew nothing else about your LLC as it relates to your content creation business. If you're interested, stick around and hear what I have to say on this. All right, there's a lot of things I can say to you about LLCs, but there's two things that you absolutely have to know. Number one, LLCs are not a tax saving strategy. LLCs are a safety protection vehicle. They are a liability protection vehicle, meaning when you go get an LLC, you are not going to by default save money on taxes unless you were to make other tax elections, such as being taxed as an S corporation or a C corporation or partnership, in order to have any other benefits, possibly tax related, in being an LLC. We can elaborate on that a lot more in a minute, but the second thing I absolutely want you to know about LLCs is that you don't have to have one in order to write off your expenses in your business. So many times I get on the phone with creators and they say, I gotta hurry up and get an LLC because I haven't been writing off my expenses on my taxes because I didn't have an LLC. And I have to stop them in their tracks to say, yes, while it is a problem that they have not been writing off their expenses in their business, it's not because they warrant an LLC. See, you can write off your expenses in your business even if you're operating as a sole proprietor or a DBA holder. A DBA is simply someone who has a fictitious business name, and DBA stands for doing business as. So when you have a fictitious business name, you're doing business as a different name than your own. However, it's still you for all legal purposes. That is the opposite of being an LLC. When you create an LLC and you operate it the correct way, you're creating a shield between yourself as a person and your operations as a company. Again, you're not doing this for tax benefits unless you make a separate tax election that would be favorable to your business operations as your profitability might demonstrate. All right, so again, there's so many things I can say to you about LLCs, but the two most important things are that one, an LLC is not a tax saving vehicle, but rather a liability protection vehicle. And number two, you don't have to have an LLC in order to write off your expenses. As a matter of fact, a single member LLC files the same form that a not single member LLC, namely a sole proprietor or DBA holder, would file. That's the Schedule C form that gets added to your personal tax return when you're operating as a sole proprietor or even as a single member LLC, further illustrating the fact that you don't have to be an LLC in order to write off your business expenses and reduce your taxable income before we calculate your tax liability due. If you'd like to learn more and you enjoyed this content, then please like this video, leave us a comment below to let me know how I can help you best, and subscribe to our channel so you can be notified of future videos coming up. Thanks so much. See you in the next one.